Good evening and welcome to the Strategy of the Week for Friday, October 4th, 2013. My name is Brian D'Amico, Manager of Educational Services here at VectorVest, and it's my pleasure to present your strategy this evening, titled The VectorVest Canada Challenge, the Benchmark to Beat. Back on August 2nd, Steve Chappell introduced the VectorVest Canada Challenge in his Strategy of the Week video. For detailed information on the Canada Challenge, I recommend watching that Strategy of the Week presentation, where we introduced the challenge, because that video will describe what the rules were, the settings of the backtest, and how we scored the entries. Let me give you a quick overview of the contest. Here's the market timing graph from July 2nd, 2008 to July 31st, 2013, which is the period we use for the challenge. We challenged you to create a trading plan that outperformed our trading plan during this time period. And as you can see, there were all types of markets here. There were big drops, strong rallies, there are sideways markets. So if you had a trading plan that could consistently make money during this time period using a mechanical method, you were definitely onto something. The trading plan that we created had a total gain of 214% and made money 4 out of 5 years. We thought that would be tough to beat, but several people did manage to do it, and over the last 3 weeks we demonstrated those trading plans. Tonight, let's look at the trading plan that we created. Here's a look at the trading plan. As you can see, we played both the uptrending and downtrending markets. Our signal for uptrending and downtrending markets was the RT kicker combo. When it gave a bullish signal, we would buy the top 5 ETFs from the uptrending ETF search. And we used a new stop criteria that was added back in June. We used a 20% trailing stop. And if the ETF gained 50%, it would be sold because it hit the target gain. And we also set a maximum loss of 20%. If an ETF was sold, we would not automatically replace it. We would only purchase another ETF if the RT kicker signal changed and then it re-entered a bullish signal. For example, if the signal was bullish when the ETF was sold, another ETF would not be purchased as a replacement on that day. If the signal then changed to neutral and then back to bullish, that is when another ETF would be purchased, as long as the portfolio had an empty slot in it. When the RT kicker issued a bearish signal, we would short 5 stocks from the last hurrah search. We did keep a tighter stop on these stocks by using a 5% trailing stop. We would also cover a position if it showed a gain of 20% or if it showed a 5% maximum loss. As with the ETFs, we would not automatically replace these short positions. This portfolio can hold both bullish and bearish positions at the same time, which is called hedging. Let's go into VectorVest and let's take a look at those 2 searches, and then we'll build this trading plan. Here we are in VectorVest 7, and we are on the Unisearch tab. To access the uptrending ETF search, simply come over to the left and open up the ETFs folder. And here you can see the uptrending ETF search. And if you look to the right, you can see the criteria of the search. And the main line of criteria is this one right here, where it states that the relative timing of the stock needs to be trending weekly. And there's 3 criteria listed here. So 3 weeks ago, the RT of the stock needs to be above 1.1. 2 weeks ago, it also needs to be above 1.1. And then in the current week, the RT needs to be above 1.15. When the search is run, the ETFs will be sorted by relative timing descending, which means the ETFs with the highest relative timing will be at the top of the list. The other search that we used was called Last Hurrah, and that is located in the Searches Short folder. So I'll come down here and open up that folder, and here you can see Last Hurrah. It finds stocks that are over $10 a share. And if you look down here, the stop price of these stocks needs to show an increase over the past 13 weeks. And that's what this means, a delta. That's just a percentage change. And that percentage change needs to be over 0. So it means the stop prices of these stocks needs to have increased over the past 13 weeks. In addition, these stocks are also sorted, so the ones with the highest relative timing appear at the top of the list. At first, you might wonder about that, how both searches for both bullish and bearish are sorting RT descending. Well, the idea here is that these stocks may be overextended and they may pull back when the market turns bearish. However, keep in mind what we're doing. We're using a very tight stop on these stocks. We're using a 5% trailing stop. Overall, they're very hot stocks, and they do have a chance to continue to rise. So we set the stop price very close, just in case they do continue to rise, which of course would be bad if we're shorting these stocks. Let's take these searches and take a look at the trading plan in the backtester. A link to the trading plan can be found in the VectorVest Views tonight, if you'd like to duplicate it in your system. So let's come over to the backtester tab, and you can see that I've already created the backtest, but let's take a look at the settings. So I'm going to come up and click on the edit button, and here I've got the default account settings. You can see that the market timing is the RT Kicker combo, which to set this up you do need the auto tester, and there is a link to try out the auto tester in the views tonight as well. If I come down to the automation rules up, I'll click on there, and you can see we're using the uptrending ETFs search. If I come over to the stop criteria, here's the trailing stop criteria. We are using a trailing stop of 20%, but if it does hit our target gain of 50%, we'll sell it. But let's say if it gets up to 49% gain, we're only going to give back 20% of that, so we'll be able to maintain some profits. We'll come over to the more settings. Here's where you can see we've only got 5 positions here. We will not automatically replace them. We'll open all 5 immediately. When entering a bullish signal, we're not going to close any open position. So we're going to keep what we have in the portfolio. I'll scroll down, and all the other settings are the same as what we've showed over the past few weeks. So no changes there. When we get a bearish signal from the RT Kicker combo, we'll use the last hurrah search. The stop criteria again here is listed as a 5% trail with a target of 20%. And again, in more settings, 5 positions. We're not automatically replacing, getting all 5 at once. And when entering, we're not going to close any open position. Now, typically we would run this and you'd see the results. But before we run this, let's talk about what should happen. And let's do that by looking back at the market timing graph. So I'm just going to cancel this. Let's go to the market timing graph. And here's the market timing graph using the time period of the contest. And let's actually zoom in on the period way back here at the beginning. So I'm going to just pull this out just a little bit. And I'm going to zoom in just right over here at the beginning time period. And I'm going to add those RT Kicker combo signals to the graph. So the contest began on July 2nd. So let's select July 2nd on the graph here. There's July 2nd. You see on July 2nd there was a bearish signal, which you can see from this little red arrow. Therefore, we would fill the portfolio on that day with 5 short positions. And you can see from July 2nd, if I hover over this arrow, there's a shaded red area. That lets us know that all of those days right there, it was still a bearish signal. So we would manage those 5 stocks based on their stop criteria during this time. And if a position got covered during this time, it would not get replaced. Now, if I move the date line forward, I keep going forward, and then here on July 10th, the signal changed to neutral, which on a neutral signal, it takes no action. But then, if I move forward one more day, it went back to a bearish signal. So on July 11th, since it went back to a bearish signal, if the portfolio had less than 5 positions, we would short as many stocks as necessary to bring us back to a 5-stock portfolio. We would then continue to do the same thing all throughout here, following that same process, because we just kept alternating from neutral to bearish signals. But then you can see here, as we move forward to August 29th, on that day we received the first bullish signal. On that day, if the portfolio had less than 5 positions in it, it would buy enough ETFs from the uptrending ETF search to get us back to 5 positions. All right, so let's take a look at that back in the back tester. So I'll come up here, and instead of going all the way forward to the end, let's just move this date line all the way back. And we said on July 2nd, it was a bearish signal. So let's move forward one day. I'm going to hit run. And after I hit run, you can see what it did. It filled the portfolio with 5 positions. So you can see here are the 5 short positions. And actually, 3 of those 5 if I come over to pending orders, based on the intraday movement of the stock, 3 of those 5 need to be covered the next day. So if we move forward the next day and hit run, once we move forward to July 4th, here you can see those 3 positions were covered, and now only 2 positions are left in the portfolio. But notice there's no pending orders. It's not set to replace the next day, even though there is still a bearish situation. And you can see the same thing if I move forward another day. Now take a look at this. If I go to pending orders, the 2 positions that are in the portfolio are set to be covered. So if I move forward yet another day, now those positions got covered and now there's no holdings left. And if you remember back on the market timing graph, if I go back up there, from July 2nd all the way through July 10th, which is when the neutral signal came. So we won't replace those stocks until July 11th. So let's go back to the back tester. So if I move forward here to the 9th, it should still remain as 0 holdings. If I move to the 10th, 0 holdings. If I move to the 11th, that's when it saw the new bearish signal. So 5 positions are set to enter the portfolio. And if I move forward one more day, those 5 positions got entered in the portfolio, and actually one of them, based on the intraday movement of the stock, needs to be covered. So let's fast forward. Let's go back to the graph, and let's fast forward. I'm just going to zoom in here on this area, because here's that signal on August 29th. So let's bring the portfolio forward to August 28th. So I'm just going to hit run, and let's bring it forward to that day. All right, the portfolio is now updated to August 28th, and it undid the zoom for me. So let me just zoom back in. And here we go. We're one day before that bullish signal. And here we have 3 holdings in the portfolio. There's 3 short positions, and one of them is set to be covered the next day. So if I move forward to the 29th, which is when the bullish signal came, it's going to cover this position, leaving us with 2 shorts. So it should then see the bullish signal, and it should fill the portfolio with ETFs. So let's run it to the 29th. And there we go. Here are the 2 holdings, the 2 shorts that are left, and it's set to fill the portfolio with 3 ETFs. So you can see how this is hedging the market. As the market transitions, it could hold both bullish ETFs and bearish short positions at the same time. If I go back to the graph, of course it would continue to do this same thing all throughout the length of this test. If I undo the zoom here, it would just continue to do that all the way through until the end on July 31st, 2013. And overall, we had some very nice performance. And if we go back to the PowerPoint, let's take a look at that again. Overall, you can look and see this equity curve. We had a total gain of 214% during that time period. We made money 4 out of the 5 years. So one of our goals with this Canada challenge was to spark some creativity and develop some money-making trading plans which you can look into and possibly use for yourself moving forward. And hopefully over the past few weeks, you've seen that. And P.S. on Monday, we will be holding a live Q&A session in a webcast where we can discuss this entry or any of the other entries in the VectorVest Canada Challenge. You can register for this webcast at vectorvest.com/events, and we look forward to having you there. I'd like to thank you all for attending tonight and look forward to having you back again next week at the VectorVest University. Good night, everyone.